You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with everyone's favorite bi-weekly source for all things options related. Yes, it is time once again for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call around these parts, the Options Insider Radio Network. Hope you're liking what you're hearing. We upgraded all the equipment here, so you'd think that would make it even better for the live stream, yet it's so advanced apparently that it doesn't want to play nicely with the live stream. I think we got something out there working for you now. Let us know if it's not up to snuff. Our producers are monitoring it as we speak, and they'll let me know if something is up behind the scenes. But I think, fingers crossed, I think everything is working out there. If not, of course, you can, as always, get the fine program on your device of choice pretty much not that long after the show is finished. Just check out the website, our app, wherever you get your finer podcast programs. And then you, too, can enjoy the joy that is the Option Block. Of course, wherever you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do enjoy hearing from you guys. And joining me on the program today, my usual cavalcade of characters, starting off with the rockingest of lobsters himself, Mr. Andrew Giovinazzi from OptionPit.com, by way of a little thing called Carmen Line Capital, way up there where the trees end. Mr. Rock Lobster, welcome back to the program, sir.
That was very poetic, where the trees end. Where the trees end and the water begins, and where you might just fall off a rock. I am well. I am watching. You know what I'm doing? All I'm doing is watching coronavirus news, but we'll get to that, I'm sure.
On your business card, just say where the trees end and the volatility begins. Carmen.
Oh my gosh! Yet again, another home run.
That's why I get the big bucks. That's why I'm sitting in the big chair here. Thinking a mile a minute, 10,000 foot perspective, while all you ants scurry around below me, down by my feet. Since I'm painting mental pictures, we also got Uncle Mike Tussaw. He's from that quaint little quiet hamlet known as St. Charles. Not a lot happens out there, unless, of course, you're talking about slinging spy puts or putting on a collar once every 2 years in SLV and all the other fun stuff that he's up to on a regular basis. Uncle Mike, welcome back to the program. To you as well. How goes the 2-year collar front? We haven't talked about that in a while.
Nothing's happened. Who'd have thunk it? The second I really put all my time and research into looking at arguably one of the, with the exception of natural gas, arguably the most volatile commodity in existence, it becomes boring. Lucky me. So at least it's going higher, so that's good.
That's good indeed. And we're going on into our next segment. It is time to roll into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down, surprise, surprise, what the heck is trading. I think Andrew said it best when we were about to get rolling with the show. Just trying to make sense of what's going on in the world. I think we all are in that position right now. A lot of irons in the fire, a lot of things to digest. The market seems like it's doing some digesting as well. For the most part, mixed to up, I should say. Some up more than others. NASDAQ leading the charge up to the upside again today. Up about 0.5%, a little more than that, 0.56% or so right now. S&P, once again, the Goldilocks, up about 0.25%. The Dow, kind of sluggish, up about 0.15%. So everything in the green, some more firmly than others. And, it's been one of those weird couple of weeks. We're still kind of trying to make sense of what the heck is actually going on in China, what is really happening with this quote-unquote potential pandemic. Is it as infectious as they say? Is it widespread as they say? Are we being lied to? All these other things. Yet the market, not particularly concerned about that right now. Most of the major indices, like we said, up strong, and we're seeing our old friends VIX Cash up a wee bit from last show, but not a ton. It was at about a 15 exactly on our last show. It was about a 15 and a third coming to showtime. Now it's up a little bit more from there, about 15 and a half. So puts up about 0.5 point from where it was this time last show. So remaining somewhat firm. I don't think that's a surprise. In fact, listen to vol views, I pretty much guesstimated almost this exact level there. So let's just call it now. Forget the rest of the week. We don't need those data points. Let's just call it right now. But that's kind of what I was feeling for the end of the week. We shall see if we maintain. There's just too many unknowns lurking out there to see vol really get annihilated too much. Of course, we have New Hampshire coming up. If we saw how Iowa played out, if New Hampshire is a repeat of that, maybe with some surprise contenders finishing higher than thought, or some sort of debacle, that could always gum up the works there as well. So a lot of things lurking out there in the ether. VVIX, still frothy. It's about 96. That puts it up about 5 points from our last show out there, which is interesting in and of itself. Actually, a little bit higher now, 96.70, so up nearly 6 points from our last show. And our old friend VXX, a.k.a. the product everyone loves to fade. Not exactly playing ball right now. It's pretty much unched. So it was down on our last show, down about a point or some changes. Threatening 16, remember, for a while there. So it's down nearly 2 points. Now it's hovering around this 14 handle, which I know some folks out there in the OI of the options on VXX, particularly someone who's got about 60, 70,000 of the Feb 13 puts, they're certainly wishing, come on, let's go. Let's go down to 13. Got a little bit more time before those become a problem. But still, VXX can be problematic around this time of year, as you've seen many times in the past. Sometimes it goes through the strike you want. Sometimes it stubbornly refuses to do just that. We'll see how that plays out. Since we're talking VXX, let's start in the land where the trees end and the volatility begins, a.k.a. the Carmen line, a.k.a. the land of the pit. Mr. Rock Lobster, sir, what is catching your eye in this kind of weird start to the week, sir?
So I've now become a coronavirus junkie because I live on a rock anyway.
See, that's what you do when you're in a compound in Maine, right? You prep for the end of the world.
Yeah, don't leave. So I feel relatively safe here since I really actually don't contact anybody all week long. But the coronavirus thing is, to be honest, I can't believe anything that comes out of her. You got a billionaire saying there's 50,000 dead. You've got the WHO saying they might have everybody tested by Tuesday, as in tomorrow. So I figure, maybe it's somewhere in the middle. To be honest, I have no idea. It looks like a factory is going back online, and then the next thing is you see people like being pulled out of their house on Twitter, and authorities are welding doors shut. So, and who the heck knows? Honest to goodness, the only thing you can point to is stuff in the West, right? So the U.S. had 4 cases. I don't know how many more cases they have. They're saying 8 confirmed, maybe. Again, it's not a huge number yet. But considering that everybody is on high alert here, you would think that reporting will be semi-accurate. Again, don't know. If you don't want to be stuck on a cruise ship with one of these passengers, though, because clearly it spreads pretty quickly. So I think there's just a lot of questions still. Yet, I don't know if Tucson can actually say his trademark line, because I don't want to take the thunder for him ever with that line. But if we're not there, we are eerily close to there. So, we marked all the way down at the 14 handle again. That is like 1491 is kind of that area where that has been the low since this coronavirus thing was announced. So I am a superstitious old vol trader, and you need to break the old low to make a new recent low. I know that sounds not very, not a surprise to anybody, but you have to have willing sellers to a level. So you remember trading, Intel, whatever, people are buying calls, and they'll buy them to a level and then they stop, right? And that was your job as a market maker to figure out what that level was. Here, like with VIX and SPX vol, very similar thing. Like that high 14 level, there's a bid down there for vol, and that bid has not gone away. So I need to see a change. To me, that's a change in perception. Haven't seen it yet. I think the vol, like a VXX trade right now, short term, is a hard trade. I don't think if you're a buyer of options, because I don't really sell a lot of naked options, or none really in the vol products. So I would rather bet on vol momentum one way or the other when I think it's moving. And right now it's very stuck. And the curve, the term structure is saying it is stuck as well until, either people believe this news and it's really as bad as it could be, or it's not as bad as it could be, and like VIX will be back to 13 in a heartbeat. So literally the market is so poised for that kind of stuff. That's I think all the big, those are all the big things. Like last week, as far as politics went, I don't think there was a lot of surprises. Iowa, we kind of know who the front runners are, the Democrats. It looks like those two are pretty much a lock as the front runners. Trump got acquitted. No surprise. There's a budget that nobody wants to pass this week. And as far as everything else, life is going on besides negative interest rates in Europe, which it would be anytime they want to stop doing that would be great. But besides all of the issues that were existing on, let's call them January 4th, I would like, it was just this, everything, I think all short-term movement is coronavirus and whatever momentum of information is flowing up or down on that's where the market's going. And that's pretty much it. The last thing I would say is a lot of the social media stocks traded much higher on earnings, and a lot of them were pulled back. So that's might be an opportunity, buying opportunity. I own a lot of those. So it might be a buying opportunity in those. But that, as far as getting into something, I'll let Tusa talk about one. That's all I got.
Well, if there's a part of the world that is not concerned by such middling things as pandemics, it is St. Charles. They just put down the weather shield, which also, of course, kills all pathogens and viruses and everything else. So they're pretty safe out there. So Uncle Mike, from beneath the weather shield that is St. Charles, what is catching your eye out in the market? Because I'm assuming it's not such small matters as this, as you called it. What you called the last show? The beer virus, beer flu.
The beer virus, yes. The beer, yes. So let's talk macro for a second, and I'm going to get political without getting political. So before you hit the mute button on me, Mark, I'm not going to go towards either side of the aisle by any means, but I just want to kind of go through some things right here. Mark's got his finger on that mute button, I can tell.
I'm sorry. I couldn't hear anything you said because you were just muted. I don't know how that happened.
There you go. So, with this, let me be, I'm trying to think how I can put this. My political views are irrelevant of what I'm going to say right now. And so we have the Democratic Party that's doing what Democrats do in terms of wanting to promise everything to everybody, typically. And with that, the rich will pay for it. No big deal. We'll just tax them. And so what's non-feasible about that is that the numbers typically don't add up. So that's the concern of the Democratic Party. Now, let's be fair. Let's talk about the Republican Party. With the budget that our Republican president just put out, some things people like, some things people don't like. But the reality is that the Republicans pitch themselves as the party that wants less government, but the budget calls for the budget to be balanced within 15 years, to cut the deficit within 15 years. So with that, let me just kind of look at this. I'm just an option trader. What do I know? But I'm looking at this in that if the Republican Party is the party that we're supposed to believe they are in terms of cutting government, I don't know of the last Republican president to actually cut government since the Nixon administration. So that's a concern that I have on that part. So my point is that we have a lot of political stuff going on. It's all a bunch of malarkey from both sides of the aisle is what it sounds like to me. Now, don't get me wrong. I have my very deep-rooted conservative, born-again Christian beliefs that I know isn't a really big part of the show. But with that, when we come to budgets and fiscal policy and taxing and spending, it boils down to me, from the way I look at it, Democrats want to tax you to death and spend money. Republicans want to borrow and spend money. And so either way, the bottom line of the equation is that the government wants to spend more money, and that seems to not change no matter what. So where I'm going with all this, for where the markets are going, is the government going to continue to spend the money? Yes, it's going to. It's like the new oath that you take. I will defend the Constitution and try and spend as much money of the taxpayers as I possibly can, but I will vehemently disagree with how the other party gets the money in the process. And so we're going to continue to spend money. And so I think the way with which we need to analyze the market, the point I'm going through with all this is that where is the money going to be spent? And where the money is going to be spent is where you could have certain good things happen in the marketplace. So that's just kind of where I'm at right now with the political spectrum. And so to add to that, let's say that a certain candidate who is pro a certain sector, who typically is more friendly to a certain sector of the economy, then that's an area with which you might see increases in stocks if that candidate wins a particular primary. And like I talked about on the year-end predictions, or the 2020 predictions on our year-end show, it was something to where I think these primaries can have a pretty big effect on the marketplace. And I'm really curious to see how certain things play out with where certain things go, depending on which Democrat wins certain primaries. And with the primary season that we have coming up, then if someone becomes a surprise leader within the Democratic Party, that could really shift things within certain sectors. Now, the reality of it is that, of course, they all have to beat President Trump first, but that is something with which to watch as a way of looking at certain option plays with which we have on this. Now, in terms of the market itself, I can't say my trademark saying today we are below the all-time highs. Not by too much, but we're definitely below the all-time highs. And so the other thing that I would like to point out, this is also a market to where there is a lot going on after hours. I don't know if anyone watched the futures last night, but we were down close to 20 points in the S&P on a Sunday night. And so with that, be very careful with how you're trading right now, because a lot of the movements that are happening in the marketplace are coming overnight. Now, granted, the market came back and we had a relatively flat open today and then a minor uptick in the marketplace today, but we are having a lot of overnight risk that's on the table. So one of the beauties of options is that you do have limited risk, or you can create limited risk with it. And so make sure that you take advantage of that if you at all you possibly can. If you're leveraged and naked in a market like this where we have a lot of overnight gaps, you could wake up one morning to some parentheses in the balance portion of your account. And that's not something that you want to experience. And then kind of going further with this, it's going to be interesting. It's also interesting to see that names like the Amazons, the Apples, and some of the bigger names that are really been pushing this market up for the last few years, in a lot of ways, are kind of unaffected by a lot of the craziness that's going on in the world. So a lot to watch. Andrew's right. We weren't really, we're kind of seeing who the market expected was to be the leaders in the Democratic primaries. Trump was acquitted. We kind of expected that to happen. And so it's going to be interesting to see going forward to where the internal market moves when certain Democratic candidates win various primaries. Curious to see that. And as always, this will be interesting.
Man, strange. We didn't hear any of that. It was muted the entire time. I don't know what happened. I must have hit the wrong button. I'm sorry about that. We'll see if we can get it cut back in post, listeners. So speaking of interesting, let's see what's interesting to you guys, at least from what you're trading out there today. Let's start with the broad indices. Not exactly lighting the doors on fire, lighting the world on fire. Pick your mixed metaphor that you want to butcher there. This is kind of what we're seeing in the broad indices. Markets kind of shrugging off, this pandemic concerns, at least for now, rallying in spite of all of that. In spite of the fact that the Lobster is building his bunker as we speak. VIX doing about 163,000 contracts as of a few minutes ago. The ADV right around 500K right now, a little bit shy of that. So VIX not blowing the doors off here. SPY, similar deal, a little bit more from a percentage of ADV standpoint at least. Closing in on 1.5 million contracts. The ADV a little bit north of 3, about 3.2 million. The S, similar story, 720,000 on the tape as of right now. The ADV about 1.4 million, so we got about half there as well. The Qs, a little bit light, despite the fact that the NASDAQ is raging right now. 322,000 contracts on the tape. The ADV a little bit north of 804,000 contracts. So that ADV has really ticked up in the last couple of weeks. NASDAQ, not surprising. It's usually leading the chart to the upside and to the downside. And, of course, the Russell, a.k.a. IWM, at about 107,000 contracts. The ADV closing in on 400K out there as well. So the Russell's been moving. There's this narrative, we talked about it before on TWIFO, that Russell is this only domestic thing. It doesn't really move with the macro currents we're seeing of late. That is certainly not the case. So interesting to see how that one responds to what is right now completely a macro phenomenon, which is, of course, this ongoing debate about the pandemic here. Let's go out to the most actives in the single name, see what you guys are trading up there. Cost you about 129,000 contracts to break into the top 10 out there. That gets you to BABA. All the way 129,000 contracts. Again, a lot of Chinese-denominated names. Lurking in the top 10 of late. Today, actually, not so much, which is kind of interesting. I know we've seen some other ones like Lucan Coffee and a few other names out there. Neo's been up there a lot as well, but not so much today. Number 9, Twitter. The social media names that the Lobster was just talking about earlier at 137,000 contracts. Number 8, Uber. The old Oobs. Let's see how many billions they could shed in a year. So far, I think they're up to 8. 162,000 contracts on the tape. Number 7, Amazon, $1.84 on the tape as well. Number 6, good old Work at 204,000 contracts. I have to pull them up and see what's going on with them right now and how they are faring out there in the broad market. There we go, 26.65. By the way, how mad are WeWork that Slack beat them to the punch there on the ticker symbol Work? It's up about 366 or nearly 16%. So that would probably account for why it's lighting up the options tape. Don't exactly see Slack in our top 10 too often out there. I'm not sure if they have earnings today. I'll get to that in a little bit. Something's driving the stock. I'm going to guess earnings for lack of other things. Number 5, good old American Airlines, 217,000 contracts on the tape. And you know what? I'm not going to parse that one too much because we're going to get to that one in a little bit. Spoiler alert for the odd block is just so sizable. All that 217,000, pretty much one trade, listeners. We'll get to that in a minute. Number 4, AMD, 290,000 contracts. Number 3, Apple. Only number 3 for Apple today. So interesting stuff. 337 on the tape. Numero dos, Tesla. The former king of the hill, now a paltry, a mere number 2. Still topping Apple today, though, so Tesla continues to deliver on the options volume front. 361,000 contracts. Number 1 with a bullet this week, Microsoft. Haven't seen that one atop of the list in a while. Just a tick under 400K on the tape for them. Let's look where our biases are lurking in the paper, and actually it looks like it's Microsoft. 78% of that paper come in on the call side of the ledger. Don't see a ton of put love out here today. It's mostly calls. 74% for Twitter, 73% for the Oobs, and then 71% for Slack. If you're wondering what is dominating that Tesla tape, it's still those Feb par puts, 68, almost 69,000. Number 2, the June 2 half puts, 250 puts, 24,000 there. Number 3, the Jan 2021 380 puts 22,000. Number 4, the Feb 75 puts 21, almost 22,000 of those. I don't think the Feb pars and 75s going to really make it. Well, we've seen crazier things. Tesla going from 750 or so down to 100 or 75. That'd be up there in terms of historic implosions. And the number 5 out there are the June 50 puts, about 22,000 of those bad boys. Let's see what's on the tape this week from an earnings perspective. I do have some names popping off here this week. By the way, all that good stuff, theoptionsinsider.com. If you want the earnings move, the analysis, the volatility, the earnings move results, the season report, it's all there, all freshly updated as of this morning. So get out there while the getting's good. Yep, Snap is actually tomorrow. Snap is tomorrow. Slack, I can't tell if they're popping off today, but I'm going to guess probably that was last week on Tuesday. I got this month chart here in front of me. And then we've got, LYFT tomorrow, Under Armour, Hasbro, CNA, locally down the street here today, popping off. Wednesday, CVS, Uncle Mike CISCO, cover your ears. TEVA, Shopify, AMAT, number 4, or I should say Thursday, Alibaba, again, talking about them earlier today. NVIDIA, bit of that former canary in the coal mine for crypto. Not sure what they are these days, but we'll find out on Thursday. Roku, perennial top 10 out there for an options volume. PepsiCo and Kraft Heinz. So a lot of names still ready to pop off here after the bell here. Again, if you want to see all that stuff for yourselves, the earnings move, earnings results reports. I'm looking at them right now. There's tons of tickers we could parse here. We could spend the whole day giving you. Let's look at one really quickly and see if there's any fun ones in here to break down. Let's do LYFT. LYFT is coming out after the bell tomorrow, the 11th. As of this morning, they were trading at, I should say, nearly $50, $49.92. They were pricing in $3.75, so fairly rich from a straddle perspective. Also worth noting, in the past, they've only delivered $3.31, so rich from a past performance perspective as well. Obviously, we don't have a lot of historical data for LYFT, but still interesting to see what the market is pricing in there as well. Let's look here. TEVA, always one that potentially can deliver. $12 for this one. Yet they're pricing in a $1 straddle, about $1.05, and they've delivered about $1.10 in the past. So that's pretty much in line. CISCO, nearly $48, $47.97. They were pricing in about $2, and in the past they've delivered nearly $2.50. So maybe a little cheap there from a previous delivery perspective out here. We could do this for days. Let's do one more because it's fun. Let's go out to Baba. They're popping off on the 13th. They were trading $216.50 coming into this report. The straddle just shy of $7, about $6.75 out there. That's a little bit richer than they've delivered in the past. In the past, they've delivered almost exactly $6, $5.97. So a little bit of extra juice in Baba. I wonder why that could be. Why would there be extra juice in Baba right now? Go figure. No idea. But that's what the market is pricing in right now. Again, there are hundreds more of these, listeners. You can go do all the analysis for yourself. TheOptionsInsider.com. Check out the season report as well. It's kind of interesting. It shows how it breaks down by week. So far, week 4, as Matt has said in the past, is the week where things kind of pop off from an earnings perspective. And it looks like that's been the case over the course of the past week there. 99% outperforming from a straddle perspective here and a volatility perspective. Interesting stuff. Check out the numbers for yourself there, listeners, to see what's blowing the doors off. Meanwhile, we got to see what's going on with our Eye of Sauron, what that's flagging for us today as we head on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Let's get weird. Let's get wild. I kind of gave you one of them already, so let's get to that one first. This is American Airlines just blowing the doors off from a volume perspective today. Easily the most active of a lot of these single names in terms of one trade, definitely. This is, of course, American Airlines, ticker symbol AAL, coming into the Odd Block here, trading 28.62, up about a quarter. So it's not the underlying movement that is driving this paper today. Before we get to what the paper is, let's look at what the stock's been up to over the course of the past year. A year ago, it was trading about not quite $10 higher, about $8 north of where it is right now. It's at about 28.62. A year ago, it was trading about 36.60, and then it kind of drifted down. By March, it got into the low 30s. By June, it got into the high 20s, about 27.20. Then it rallied back up into July, up to about 34.5. Then it looks like it got clipped a bit on earnings again because it sold off again pretty quickly. By August, it was down to 24.5 and hit its pretty much 52-week low of about 24.25 there. Then it kind of bounced up a few times since then, got up to about 30, and then back down to 25, and back up to 31, and so on and so forth to where we find ourselves today at 28.63, kind of off those highs, and kind of right in the middle, really actually not that far off the lows here. The low is about $4 shy of where it is right now, so mid to lower, I guess you can say, on that 52-week range. Let's see what our Eye of Sauron found. Kind of hard to miss this one. Takes up all the oxygen in the room. It looks like, has the feel of a collar, pretty tight one at that, which is kind of interesting. Like I said, we're trading right now 28.64. Someone coming in for size, looking to perhaps collar up his position right around that 28.60 handle, because coming in for 109,000 of the March 28 puts for $126. Go figure, lifting the offer to get 109,000 of anything in American Airlines. You're gonna have to lift the offer, if not probably trade through it. These were crossed. Clearly, it's going to have to be for that kind of size as well. And also opening. Of course, that goes without saying for most of our Eye of Sauron. And then against that, also seeing about 85,000 of the March 29 calls going up, go figure, on the bid for $117. So doing that a bit of a ratio, 109,000 on the puts, selling the calls probably for $117, 85,000 times also crossed over there as well, which, again, this kind of size, you're going to probably assume that's a given. That looks like it has the feel, Mr. Rock Lobster, of a very, very sizable and very tight collar. I mean, this guy's not giving himself a lot of room to run at all. This thing gets above 89, he's out. Gets below 89. That'd be interesting. He'd certainly be happy to get out of 89. At 29, he's out. And if he gets below 28 to the downside, he's also out. This is one of those ones, I think, if the Viceroy is here, he'd be like, why is this guy bothering? Just get the hell out of Dodge. He was, as I recall, never a fan of collars because he said people never really want to sell the call leg. They just want to buy the put and get it cheap. So interesting stuff. I think there's a lot to unpack here. First off, the size. Are you on board the same train that this guy is collaring this? And then B, if you are, what's your sense of someone putting on a collar this freaking tight, and it's pretty near term, March. He's not going out that far, so he's collaring himself out pretty tight. Not quite zero cost. He's doing this for about 9 cents, pretty close to it. And of course, he did it on a ratio too, so that probably makes up for. Actually, no, he did it the other way, so he's paying more. But still, the notion of a collar this sizable, A, and then B, if he's doing it, a $1 collar, I don't know. Can you get behind that?
Can I get behind this one? The only thing I can think of is they must have a very specific goal in mind. I want to sell it at 29 no matter what. Or 9 cents under 29. That's the only thing I can think of. Maybe they're worried about this coronavirus. They own the stock. They'll take it, roll it out at 29. But if you get that pullback, they want to take a winner. I mean, I look at a lot of collar trading as if you're not really going to sell the stock, but you just want the collar to have a short-term short, like a covered short. And if the stock keeps going up, you just get taken out and you should make money anyway. That's why I generally I won't put them on unless you get some kind of credit. Because you just want to make sure you make money if you get taken out on the upside. And then what it does is it gives you kind of a free downside trade. So, and let's say like 2 months, like for the next month, like the market's just ugly, and then the person closes their collar, takes the money, but they're not selling their American Airlines. So I look at collars like that as sort of it's a free shot on the downside for stocks you don't want to have. And I like, to be honest, like a stock like Twitter or something like that, where, it has those times where it just flies and then you sort of, I just bought puts, but because we thought, it's possible takeovers. They don't really sell calls on possible takeover stocks. Nobody's really buying American Airlines. Well, maybe they could, but it doesn't look like much of a takeover candidate. So it's just a way for a stock you don't want to get rid of. So I think, sure, you have a lot of uncertainty out there right now. It could all be nothing. But they want to take an aggressive short that they could still win on if the stock keeps going up. And that's how I see that. They're just happy with less gains and being out than not being covered at all.
Interesting. You're far more charitable on that than I assumed. We've lambasted other types of trades like this. Yeah, this is kind of why I take a dim view in general on kind of these quote-unquote zero costs, because you end up doing strikes like this. Maybe you aren't your ideal first choice. Rock Lobster seems to like it. I'm a little less optimistic on this one. But hey, to each their own. But what this does do, which is nice, will give us a chance to talk about it again. We're going to come back to this one because this is just too big and too perhaps controversial not to. We're just loading up our review column, Mr. Rock. We got to do a whole review show just to start cleaning it out again. We have a lot to watch here. Our Eye of Sauron is busy, not just finding us new stuff, but tracking the old stuff as well. Let's keep on rolling, see if we can add more to that column. What do you guys think of a $1 collar, about a month and change out in a name? Is that a waste of everyone's time? Is that a love your broker trade? Do you like it? Like the Rock Lobster maybe seems to do? He's the king of the $1 collar now. I'm going to start calling him that. As we move on to our next name here. This is everyone's favorite, XP Investimentos. In case you can't figure out from the name, this is not a U.S. name. This is a Brazilian investment management company. And their ticker symbol, XP, appropriately enough. A lot of experience points floating around for these guys, I guess. Actually, I should say trading right now exactly $37, off about 1% on the day. So the name has had a weird year, not a huge moving year. A year ago, it was trading 34.5 or so, got down to about 32 and change. It was like around the December time frame, and then kind of that just doesn't go back that far at all. So maybe this is a newer listing here as well. This only goes back here till December of last year. So not a lot of time to parse here. And about 42.5 on the upside was the high. On this chart is all signs of screw. It's telling me the 52-week high is 43.5. My chart is not showing me that. So I don't think this data might be a little bit screwy on this one. But it's not screwy. It's the options. And that's what our Eye of Sauron is bringing us here today. We're seeing, looks like the 30 puts, someone perhaps drawing an aggressive line to the downside because it's picking up nearly 30,000, 29,664 of the 30 puts for 30 cents. And these are out there in March. So again, March, the preferred time frame here for our odd block. These are obviously opening, going up on the Philly. Worth noting, there are some, by the way, I should mention the earnings in American. Earnings are April. So that collar doesn't even get you earnings. And yet another reason why perhaps I take a bit of a dimmer view than the Rock Lobster on that one. Let's see. Yeah, 29, nearly 30,000 of these March 30 puts in XP earnings March 17th. So it looks like they're going to come in right under the wire here for these puts when it comes to earnings. Yeah, March expiration is the 20th. So yeah, right under the wire there. For these bad boys, pretty sizable, Mr. Rock Lobster here. Do you take a more optimistic view? And of course, this market was a dime at 70 cents, so it's open to interpretation what the hell this guy was up to. I don't know if he found a 30-cent bid for these. We shall see. First off, where do you fall? You think he drew a line in the sand, or you think he's maybe stopping himself out at 30, Mr. Rock Lobster? And then B, what's your thoughts on these 30 cents March puts here in everyone's favorite name, XP Investimentos?
Yes, 30 cents, right? So the market is a 30-cent bid at 40 right now, won by, let's call it 50. And they put up 30,030 cents.
Quality market.
My nose says this is a line in the sand put.
How are they now? At 70.
I just feel this is a line in the sand put. I don't know how it could be anything else. Of course, it could be anything else because I could be wrong. We've been wrong before. But I still think line in the sand put. It looks like a relatively new stock, or is it just my imagination? I'm trying to look here. It doesn't have a lot of history.
My data goes back to December, so it looks like it just came online fairly recently.
Yep. It's Brazilian. It's probably, let's see here. Maybe it's a renamed company? No, it's I guess there's some other Brazilian billionaire at this point. So some sort of Brazilian finance company thing. So gosh knows what that is, what that means. But, somebody sells 30,000 puts. I think it's an insider stock buyback, something like that. That's something that a lot of big corporations do. They just sell puts, and they have to give stock to their employees. So, hey, let's sell 100,000 puts a quarter, and we'll be able to give them stock at cheaper prices, or we'll just keep the money. So that is something that corporations do. This one could be the same thing, or just somebody wants to get long, kind of at the bottom. It's hard because I don't know any very little color on this one, except for 30 looks like a pretty good price relative to where it opened. And it looks like somebody might be a little bummed they missed out on the IPO and they want it at $30.
Yeah, then that could certainly be the case. Again, this is such a crazy wide market. You could drive 2 semis and a donkey cart and a 737 through this market. So it's open to interpretation what they went up to. Mr. Lobster thinks they found a 30-cent bid. That's a pretty good bid if they found it. 30 cent to buy it, an offer at 30 cents, also pretty good. So I think either way you cut it, 30 cents, not terrible, for at least for this atrocious market. It's not bad. I think we'll see. We'll have to see what our friends did. If they're stopping themselves out by March, it would be kind of near term. But again, March is all the rage today, so who am I to second guess such things? And if they're selling it, 30 cents, not terrible either. It's a weird one here. And looking at this chart, again, we don't have a lot of data to parse here, so it's kind of hard to analyze that. But 30 cents, again, compared to the IPO, or I should say 30 cents, $30. Not the worst level. This another one's going to go in the to be watched category because it's kind of weird and we don't really know what the hell they were up to. So we shall find out. That's the joy of crazy wide markets and illiquid names. Makes the analysis that much more. What do you guys think they were up to? Think they were selling? Think they were buying? Something else? Some weird quasi-buy sell? A new order type perhaps? Let us know as we keep on. Everything's fluid these days, including the transactions. Let's head on over to our final name here. This is Liberty Global. This is a multinational telecommunications company. Easy for me to say, with HQs in London, Amsterdam, and Denver. By the way, you can't have multiple. Goes back to the whole Amazon second headquarters. You can only have one headquarters, hence the name, headquarters. Others are just satellite offices. You can't call them HQs. So Amazon got away with it until they didn't. And it looks like Liberty Global getting away with the same thing. Let's see what they've been getting away with from a stock perspective over the course of the past year. Right now, trading 19.14, off about 1.5%. A year ago, they were trading 23.34, so a wee bit higher than they are right now. They rallied up since then. They got up to about 27 and change in April. And they sold off again down to about 24, then back up to about 27 and change. Pretty much 27.80 or so is about their high on the year. They hit that or close to it a couple of times in July, sold off again, got up to about 27. Looks like they hit that high in September again as well. Then they kind of fell off a cliff a bit again. By October, they were trading 23. By November, they were back down to 20. And they broke through the 20 handle not too long ago again, back in January, and they've kind of been slowly eroding ever since. Let's see what our Eye of Sauron found for us today. No, you might think it'd be puts given that longer-term downward trajectory, but no, it's got some call prints here, maybe some call love here. We got the Feb 20s going up 9,780 times for 28 cents, pretty close to the offer there, 15 at 30, going up for 28 cents. This is opening as well, obviously, for all of our stuff. Worth noting, they have earnings on the 13th, so looks like this is a bit of an earnings swing for the fences coming up this week here in this next. Mr. Rock Lobster, let's close it out here with a pretty, shall we say, stereotypical odd block entrant. Someone swinging for them their fences about 10,000 times for 28 cents. Pre-earnings here in Liberty Global, sir.
Isn't it just a cable company?
No, it's a multinational telecommunications company with headquarters in London, Amsterdam, and Denver, sir. Were you not paying attention? The Denver HQ?
Who is the guy that owns this Liberty? What's his name? He's that billionaire guy. I can't remember. Could it take off on earnings? Sure. What the hell? Why not? You know how annoying a 5-letter symbol is, though, to type in and remember. What happened to 3-letter symbols, Or like XP, 2-letter, LBTYK. What the heck is that? LBTYK.
That's not a good ticker. Go back to XP. They learned. They got a nice short ticker, right?
Liberty, whatever. Here's another one. Stock way down in the basement. Somebody wants to buy the 20s for a shot for maybe some good earnings to come out. I think, are they suffering from cord cutting and crap like that? Quite possibly. But it's a cheap shot. It's at the Price is Right calls. That's all I can say. It doesn't look like it'd be too much trouble to get back to $22, and they have a winner. So I don't know exactly what's going on with this stock because I really don't follow this particular one, as you could tell. However, somebody's trying to buy the bottom, and the price is right relative. But Feb 20, they got a week. They got a shot at it. There's a reasonable shot.
There you go, Mr. Rock Lobster. Since we're going trifectas, and this is a pretty close one, we can pay this one off pretty quick as well. So let's see if our friend's swing at the bat works. We'll find out in about a week or so if that's the case. Meanwhile, we're going to find out right now what the heck Uncle Mike is up to with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, you got crazy political early in the show, so we had to mute that entire segment. So listeners, this is the first time they're hearing you on the show, so they'll be excited to hear you. What do you have in store for them today on the Strategy Block, sir?
I want to discuss Richard Nixon versus Lyndon Johnson.
Oh, I'm sorry. How did that hit my mute button again? What's going on here? Everything's broken.
I want to talk about how to manage put spreads, or how I like to manage them. I think in a market like this, we're going to get a few more degenerate premium sellers, as Mark Longo would say. And I want to talk about how to manage things like this. So let's say that you see a stock and you want to sell a put spread on it because maybe you feel volatility is high enough to justify bringing in some premium, and you want to be a part of this bullish upside. So you're selling an out-of-the-money put spread, meaning the stock's at 30, you're selling maybe a 27.5, 25 put spread, let's say, for 1 month, 2 months, whatever you decide to do. One of the biggest mistakes that I see in traders, that I've seen in traders for 15 years, is that they let put spreads go in the money. Whenever you let a put spread go in the money, when you're trading it out of the money, you're really taking on more risk than you originally should have been taking on to begin with. So, for example, let's say that you get a $1 credit for $5 between strikes, you're risking 4 to make 1. And ultimately, if you do nothing and let that put spread go in the money, you're going to need to be right 98% of the time to ultimately be profitable on that trade. Because one time can really bring you down. I don't know about the 98%. I just kind of made that up, but that's what it seems anyway. And so on that, I'd highly recommend the Uncle Mike two rules of trading verticals. Rule number 1, never let them go in the money. Rule number 2, don't forget rule number 1. If you go by those 2 rules, most of the time you'll be okay. Does that mean you're going to be prosperous? No. But does that mean that you're going to freak out when all of a sudden you're just watching the market go down and down and down, or your put spread, whether it's or a call spread for that matter, going down and down and down on your value of your account? Oftentimes, if you have a defined exit point, you can be in a good spot with that. Now, there are times to where I'll get out of a put spread even earlier, meaning, and when it's going against me, meaning that let's say that I'm looking to make $1 on the put spread, or I'm getting a $1 credit. When it's at a point to where I'm losing $1, give or take, I'll give it maybe a dime margin of error for getting filled or that type of thing. That's usually when I get out. And I might make an adjustment. I might roll it down and out. I might roll it out, whatever the case may be. But I'm not letting it go in the money. Now, sometimes on the put spreads, if you're selling them further out of the money, you need to be a little bit tighter. You need to have this rule before it gets even close to going in the money. But with that, if you ultimately don't let them go in the money, you usually will be okay. And once again, I like to take it a step further to where if the put spread's far enough out of the money, even if it gets to the point to where I lose what the initial credit was supposed to be, assuming I held till expiration, which I never do, then I'm usually out of it at that point. So don't let these things go in the money, folks. You're asking for trouble. Now, of course, what's going to happen is that you're going to say, oh, okay, I'm going to do what Uncle Mike said. I'm getting out of this thing. It's maybe 1 penny out of the money or just touch the short strike price. I'm out. And then the second you do it, the stock's going to rally. It's stinking Uncle Mike. What the heck does he know? That's probably going to happen, just so you know. But I do believe that in the long run, that is a very wise thing to do. And that technique has really been something that's kept me in the game for a long time. Now, what the heck do you do with it when you get out of it? Well, you have some choices. You can either say, forget this, I'm done with this stock and move on to something else. Or you can be like me, because I'd say probably 90% of all trades that I do involve SPY. And I'm never going to be done with that. And so what I'll do is I might say, okay, I'm going to wait for a while. I think this is a tough market. I'm just going to stay out for a while. I didn't make a trade for probably 40 days at the end of 2018. And I wasn't in a put spread to begin with, but I stayed out of the market. I just waited. Now, the other thing with which you can do if you're still bullish, you could roll down. And so like, let's say, and I did this a week ago, I talked about it on the show. Let's say that you're still bullish on the market and you still want to have some exposure. What I did is I rolled down to where I'm like, all right, this thing's going to expire in about another week. And because I'm rolling down, if I can get out of this put spread now at 6 pennies or whatever the heck it was, I'm basically playing to break even for these 2 weeks. Nothing wrong with that if you're still bullish on something. On and out, taking on some more time frame, meaning rolling down the put spread to a lower set of strikes, and then rolling it out another week, month, whatever. Then you have, if the market goes to the high heavens, then you have the ability to participate in what you were going to originally participate in the first place, just 1 week or 1 month, whatever time frame you're using later. So those are some things that I like to do when looking at put spreads, which this market might favor that more with a 15 VIX, but it might not, depending on what your sentiment is on volatility in the markets in general. But those are some things that I like to do, and hopefully they may help you in your trading. And that is the strategy block for the day. I'm going to go back up to the mountains.
Before you go back up to the mountains, I know some of our listeners are going to ask. I'm going to put it out there for them, because I know a lot of our listeners, we always tell them put spreads. You're telling them put spreads right now. It's hard to get them to get that extra leg on, right? They want to sell the put. They just want to sell the put. They want to harvest their premium, and that's it. So I know you like a good wheel trade every now and then too, Uncle Mike. So I'm just curious from a broad 10,000-foot perspective, how many of your put sales would you say are in this spread category? And then you said you do a lot of SPY, so I'm guessing a large percentage. And how many are then just in the single leg to wheel into a name?
Well, I still do both. So for our triple income program, that would be what we consider non-leveraged money, meaning that we want to have similar leverage as what we would have with a stock. And with that one, I might let the put get put to us and then do a wheel trade. So that would be something totally different because we're totally cash secured. What I'm referring to is the leveraged section of your portfolio, to where if you let this go in the money, you don't have the money to be long the stock if it gets put to you between the strikes, let's say. So in terms of the percentages, I would say more dollar amount goes towards the wheel trades because most of my clients' portfolios are non-levered, but probably more of my time and sweat equity, so to speak, goes towards the put spreads on SPY just because of the fact that they do require more attention and more work and more adjustments to do.
There you go, listeners. I knew you were going to ask, so I saved you guys the time. Uncle Mike does sell puts too, and he doesn't always just roll them when he get to the strike. He does the wheel, the quote-unquote triple income. I like that name as well. So a little bit of a different strokes for different folks depending on what you're doing and what the uses are for that capital. But now we have to keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, a lot on the Around the Block docket. Of course, there's the global macro boogeyman that everyone's keeping an eye on, of course, this week. Of course, we have some domestic political developments going on this week as well to see if these tides we saw coming out of a relatively small and a seemingly broken sample size in Iowa, if that can be replicated in yet another very small electorate body there in New Hampshire, or if other things will develop. Of course, on the micro side, we do have a lot of names popping off, like we mentioned, LYFT, popping off this week. Under Armour, Hasbro, CVS Wednesday, Cisco Wednesday, TEVA, we talked about them earlier, Shopify, AMAT on Wednesday, Alibaba on Thursday. That'll be an interesting one to watch, kind of a bit of a bellwether for what's really going on in that region. NVIDIA, Roku, PepsiCo, Kraft Heinz, all that on Thursday. And then you got some more names popping off, like everyone's favorite Yandex and Bladex. Yandex and Bladex, both on Friday. There you go, two of everyone's favorite names. But before we get any more, let's go back around the horn and see what everyone else is watching for the rest of the week. Let's start in the land of the lobster, where he's already disaster prepping. Mr. Rock Lobster, when you're not busy building the bunker, what is on your radar for the rest of the week?
When I put down my shovel, you mean? And stop putting the concrete bags, sandbags up around the compound. I'm like still 100% coronavirus. Like Chinese people are going back to work. I'm looking at Reuters reports. Don't really know. Still, still questions. The other thing is oil. Exxon is at a multi-year low, I believe. I was looking great on my Apple Exxon swap on Thursday. Now down $4 from there. Not so great. Very interesting to see what the market does. Like natural gas is so basically that energy commodity side, it's either again, I'm not really jumping in front of this to catch the falling knife. I have bought some, nowhere near any kind of a large position yet, but just something to watch. And anytime something gets at an all-time low, a lot of times it can go lower. And that's the reality. So, and that's what I'm thinking. So we're replacing fossil fuels with what? So anyway, that's just something I'm looking at. We'll see if anything comes of it.
Look at you. I've started listening to Twifo, sir, looking at all this crude you got going on out there. WTI makes an appearance every now and then on the old Twifo program. Uncle Mike, I'd ask you if you're watching your silver collar, but I know that's not the answer. So what are you up to? What are you watching for the rest of this week until we gather back together on Thursday, sir?
Well, I do watch it, but no, just watching pretty much everything that Andrew said and just watching to see if we can make new all-time highs by the next show. Would love to say my trademark saying on the next show. That would be a lot of fun. And watching the Democratic primaries as well.
There you go. The big macro and indeed some micro trends to keep an eye on if you're sick of all the horrific macro trends we're watching here for the Around the Block segment. Unfortunately, if we're done with Around the Block, that means we're pretty much done with the show as well. That's what that music means. But before we go, saying I need more in my ears today. Don't worry, we'll be back in about exactly an hour. I do believe all the live stuff is working, so you can tune in and enjoy all that. It seems like you guys are doing just that. And we'll be back in exactly an hour. Talk some crypto derivatives. Got the folks from TradingView joining me. They were on before. I know a lot of you guys like their platform. It seems like it's blowing up all over the place. So, and they have a lot to offer on the crypto and the crypto derivatives front. So we'll bring those guys back on to chat about all that fun stuff and a lot more. It'll be in exactly an hour on the crypto rundown. In between, we'll pipe some fun stuff in there for you guys. Maybe some OPR. I think they got some SPY calendar spreads going up in there. Some other maybe SPY put verticals, kind of like Uncle Matt was talking about. We'll find out what Brian has in store for us in a couple of minutes when you hear that. If you're listening after the fact, to sit next on your device of choice. But before we do that, let's go back around the horn. Let's start in the land of Uncle Mike, sir. If I am intrigued, I want to contact you to talk more about this put rolling and adjusting strategies. Where should I go? What should I do?
By all means, go to stcharleswealth.com. Would love to have a conversation with anybody in terms of option trading and how it fits in with overall wealth management. Not a lot of wealth managers believe in that, but I do typically.
You heard him. He wants to talk to anybody. So just call him up. Give him a call about anything. You want to talk politics? Give Uncle Mike a call. Make sure you go to the website first. Click on the Fox so he knows that you like it. All right. And last but not least, let's get him out of his doomsday prepping. Mr. Rock Lobster, sir. If I want to join you, I'm guessing it might be a somber mood in the Vol Club right now because everyone's prepping for the end of the world. But if I want to join that somber group of individuals, how do I go about it?
Come on over to the Vol Trading Club. We're still designing the hats, and also come over to Option Pit. If you want to learn how to trade this Vol stuff, use our Edge Hunter sheets. Learn how to use Vol to help structure trades. We are the place.
They are the place indeed. Get your sweet MAGA hat as well. Not quite the MAGA you might think of. Not the Larry David MAGA hat. No. A different one. An Option Pete Option Pit Original. Find out more about what the heck I'm talking about. OptionPit.com. Sign up for Andrew's club there. It's not quite as dour as it sounds, so don't worry. OptionPit.com is the place to go. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for keeping those questions coming. We'll get to them on Thursday, and we'll see you back here in a little bit for the Crypto Rundown, later on this week for all of our other shows, and then we're back together on Thursday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.